Good afternoon. Andrew Cooper here, Advice for Living Financial Planning in Diamond Creek. It's the second day of the new financial year, and I wanted to take just a minute or so to update you on some of the changes that have been made to a number of rules and some legislation that affect people who are both still contributing to superannuation, people that have insurance, and also people that are retired and are on age pension. Now, there's a bunch of these changes, so I will actually need to look down a little bit to make sure that I get them all. Now, first change, and we dealt with some of you with a bit of this late last year, is that people that have got small superannuation balances and insurance inside those super funds, and they haven't been using those super funds, they are in danger of the insurance being cancelled and now the superannuation money actually being sent to the ATO. So if you've got a superannuation account that you haven't accessed you haven't contributed to for the last 16 months and it's got less than $6,000 in it, then you should contact your superannuation provider if you want to keep the insurance in place, because some people keep a number of small superannuation funds with a range of default insurances. If you want to keep that insurance in place, then you should contact the super fund and tell them that you want to keep that insurance in place, even though you're not making any contributions. Now, just because it wasn't rolled over last year, just because it wasn't shut down last year, doesn't mean it couldn't be in the future. Because that basically, if that 16 months gets to the point where it hasn't been, you haven't made contributions for 16 months, and it's below 6,000, then they can just do it. So basically, you need to opt into the insurance. So that's the first one for people who are still working. Also, for people that are still working as of the start of this financial year, if you are making concessional contributions to your superannuation and you've got less than 500,000 in super and you don't make your full concessional contribution, now that's your salary sacrifice or employer contributions, then you can actually store that up, a bit like your mobile phone plan. You can roll over the credit and use it again. So if you're 10 grand short one year, then in the next year instead of 25 you could put in 35. So that only applies from this financial year. Concessional contributions. If, however, in terms of contributions, if you retire, say in this financial year, and next financial year maybe you get a late payout or something like that, you can now make contributions to your superannuation without having to meet the work test. So the year after you retire or the year after you stop work, you can make contributions, and you can even use the bring forward thing. We can have like 3 years of contributions brought forward if you want. So that's an option. You can only use it once though. It's just the single get out of jail card basically. So if that's the situation where you are planning to retire this year, you know that the next year you could make contributions to your super. So that's one. So now let's say if you are retired, there's a couple of things that have changed. The pensioner work bonus has been increased from $250 to $300, which means you can earn now up to $300 without affecting your age pension. That's an increase of $50, which is good. If you need some more cash and you own your own home, the pensioner loan scheme has been extended. So it used to be you had to be an age pensioner, whereas now if you're not an age pensioner, you can still, the government will basically take out an equity loan for you so you can borrow against the value of your house and get regular payments, a la age pension from there. You don't have to be an age pensioner anymore. So that's an important issue. Concessional. Okay. And lastly, if you are arranging if you've got aged care or home care that you're either arranging or for someone else or for yourself, aged care and home care fees have increased. Surprise, surprise. An important and useful thing is that for home care fees, the home care providers now have to put their fees on their website. So that's great. So you can compare in terms of home care, because in the past that's been quite difficult. As I said, aged care fees are up. In terms of fees that are coming down, those of you that have Vanguard funds in your super or pension or investments, and that's pretty much everybody in our practice, you'll be pleased to know that Vanguard have reduced the fees on a number of their funds. I know I've often spoken to people about this, and told them that one of the reasons I like Vanguard is because they're a mutual, and when they get to a particular size, then they reduce their fees. They've done it again, so this is actually now the fourth time in my time in the industry where they have actually reduced their fees. It's not on all funds, but it's on a large number of the funds, particularly on their exchange traded funds. So that's really good value. And in terms of shares and that sort of stuff, share markets continue to do well around the world, so we're certainly riding that. There's been a number of suggestions that we might be in for a correction later on this year, and that it might be of the order of maybe up to 10%. I don't know. There's always naysayers in the world, but there does seem to be some suggestion that the market is, as it often does, getting ahead of itself. So if there is a correction, just remember we've had some tremendous growth over the last 2 years, so you might have to give just a little bit of that back. But other than that, I'm quite happy. I'm not sensing a major correction around that sort of stuff. So anything where I feel we need to, start diverting people back to cash or anything, the market is still doing well, and I'm still very confident. So anyway, if you have any questions about any of these things, I know this one's been a bit longer, but there's been a lot of stuff started from the start of the financial year. Any questions, do please give us a call. If I get enough inquiries on any particular aspect, then we'll maybe do something special on that particular thing in the next video. Anybody you think might be interested in this, do please pass it on to them. And of course, as we always say, we are a referral business. So if there's anyone you know who you think we may be able to assist, anybody who's thinking of retiring, anybody who's lost maybe had a death in the family, anybody who's inherited some money, anything to do with money, then do feel free to give us a call, and we'd be happy to help. Have a great day.